All right, good morning and happy Wednesday, everyone. This is Taylor checking in for the May 24th pre-market prep. And we got some prepping to do. The party kind of sours here a bit with the flush you got there yesterday. So remember, coming into the week, the Bulls pretty much had everything they need to go on ahead and get the job done here and actually trigger that breakout above that 4,200. They had squeezes, they had buy signals, they had all the good stuff. And then on Monday, they flirted with the idea. Close but no cigar. They briefly flirted with the idea yesterday, but then late afternoon into the close. Pretty big flush here all the way back down to that daily 21 EMA, which, as we know, guys, is usually going to be the buy zone. The issue here, they're giving a little bit too much back on the flush as far as looking for that immediate continuation to the upside. So problem numero uno, we're all out of buy signals on the daily chart down to the 5-minute. And now you've got a sell signal on your 2-hour, 1-hour, 30-minute, 15. So the whole bullish case, it's a little bit easier to call for that when you're north of that 21 EMA with nothing but lower time frame buy signals. You end up under the 21 with nothing but lower time frame sell signals. It does open the door for a bit of a flush lower. So here's my thinking. You get the big old 4,100 right down here. If today, tomorrow, Friday, they can't quickly yank this thing back above that daily 21, the lower time frames here would suggest you could be carving out a path for a push back down to support. As we once again find ourselves back in the box. So this box has been going since early April. So with today being what, the 24th, you hate to see it. There's a chance we might have gone through all of April and now all of May, failing to have broken out of the box. But yeah, guys, keep it simple here. Back above that daily 21 today, tomorrow, or Friday. From there, they can start to rebuild under that 21. It does make it a little bit easier to keep on coming down. And if that is the path here, just understand the domino effect as far as all the individual stocks. Where the most important thing to note here is your leadership. Technology, semiconductors, while their daily charts certainly look better than the S&Ps, the NQ, for example, this could pull back another $200 back down to that daily 21, and you're still looking at a really good chart. All right, nothing about the structure, nothing about the short-term trend would change. But it does make it a little bit tough if you're getting long up here and you have to sit through that reversion to the mean. So Qs look a little bit better, but the S&Ps might spoil all the fun. So now the question is, if we do come down towards 4,100, does that finally open the door for some dip buying opportunity in names like the Netflixes, the Teslas, the AMDs? And that might require a little patience. So Netflix, for example, my thinking right now is we're looking for a flush. And with that flush, we're trying to build a position here in that weekly squeeze. All right, big weekly bull squeeze. So the thinking here is 2 to 4 to 8 weeks down the road. Everything holds structure. Weekly squeeze should break out. And then I think you're looking for a push here towards 400. All right, so that's what we're looking to buy the dip for. And for today's session, I think is a pretty good over-under level. Watch the 350 line. Now, a couple things have to come together. Whether we're getting long at 350, whether we're getting long, maybe down here at that daily 21. The trigger for that long has got to come in the form of a lower time frame buy signal. Right? 350, 21 EMA. Either of those could be your quote-unquote launching pad. But until you get the shift here where above or at your launching pad, 5-minute chart, 15-minute chart, they start telling you the path of least resistance is to the upside, that's you're looking to buy that dip. In the absence of a 5-minute or a 15-minute buy signal, 350 might not hold, and 340 might not hold. So the key is to mark up a few good levels, but then take your momentum indicators, take your structure indicators, try to wait for that trigger. All right, 5-minute, 15-minute, 30-minute hourly charts, they all went into a big uptrend. Now your 5-minute, 15-minute, 30-minute charts, they're in a bit more of a downtrend. It's just sitting through this $20, $25 pullback. So from here, what's going to trigger the push back towards that 375? The 5-minute, 15-minute, 30-minute, right? Your lower time frame is once again going into an uptrend. The first good sign of an uptrend is going to be that buy signal. So point being, no rush on Netflix. And then for Tesla here, this thing was screaming yesterday. 190 broke. We're clocking towards 192-ish. And then with the rest of the market, a pretty big reversal there into the close. So for Tesla here, working the game plan of trying to buy the dips, so long as we're above 180. You kind of look at it like the S&Ps, where not to the same magnitude, but the S&Ps have been stuck in that box. Tesla was kind of stuck in the same box. 160, 175. You break that level, we shouldn't end up going back in that range. So same thing, above 180, waiting for a lower time frame buy signal to trigger the next entry. Could be a 5-minute, could be a 15-minute, could be a 30-minute. Usually the more the merrier. And it looks like Tesla's going to open about 183. So going to open a little bit lower. Now, we did take a little bit of a nibble here yesterday in the gold room on the June monthly expiration call debit spreads. All right, so here's kind of the thinking after a big push. Wait for that flush, scale into your position. So yesterday, finally pulls back to a 30-minute 21. We took that call debit spread with a third of our typical position size. So if your typical position size is, say, 3% of your account, we put 1% of our account into those call debit spreads yesterday. And maybe you're coming down a little bit lower towards 180-ish. And then you look to add another third, maybe another third. But as you're buying into the strength, I think the whole mindset of trying to scale in versus going for the full shot does make a morning like this morning a little bit easier. Like, all right, we're not getting the immediate continuation. We're coming down another $2 or $3 here. But hey, if this call debit spread goes to zero and Tesla just gets demolished here today, I've got 1% of my risk at 1% of my account at risk versus 3, 4, 5. So watching Tesla above 180, and then so many more of these leadership names. It could keep coming in a pretty good deal here. So Amazon, Amazon's a pretty good looking chart all the way down to like 110. That's a decent flush from yesterday's close. So Amazon's got room to come down. Look at a name like an AMD. All right, AMD's got lots of room to come down. And that's down about $2 here this morning. So for me, the name of the game is pretty simple. Whether it be an AMD, a Netflix, a Tesla, I'm going to mark up a few levels where I might look to buy them. Mark up a few potential buy zones. But then in the absence of a trigger, we're not doing any dip buying just yet. And then one more thought here. Say you're going into today's session, you got a couple longs, got a couple calls, got some put credit spreads. Maybe as a hedge. Maybe buy a few puts here on the S&Ps and hold those puts until we can close back above that daily 21. A little bit of balance where, say you're long Tesla and you're long Google. Well, now the S&Ps are looking a little bit suspect. Short the S&Ps with the stop above that daily 21. And now you got a little bit of balance here. If the market falls apart, manage your risk in Google and Tesla, and then let the puts take you to the promised land. Or vice versa. S&Ps bounce. We're back above that daily 21. And then I think you're looking for your Googles, your Teslas to keep the party going to the upside. So as we're kind of sitting through this moment of uncertainty, you could call it, maybe look for a little bit of balance in your book of trades. Or going all the cash is not a bad idea either. But we'll see what's up here today, guys. Now what you're looking for if the bulls have really got a good firm grasp on things. A pullback to an hourly 21, not a big deal. But when the pullback looks like this, like structure shifts, momentum shifts, you get a sell signal, and they're giving back a little bit too much. And then when your daily chart starts to break structure, if anything in the short term, you do kind of pump the brakes in the whole idea of looking for that breakout. They had everything they needed coming into the week, and now they've kind of got nothing. Daily squeeze is neutral, under the 21, nothing but the sell signals across your lower time frames. And then two more things here, just bigger picture. The junk bonds, HYG. Another indication the market might want to go a little bit lower is some of the problems developing over here. Where best case scenario, HYG is just as bullish as the QQQ. Squeezes firing off, buy signals, all kinds of good stuff. This is a little bit more sketch. Daily bear squeeze with additional sell signals on the 4-hour, 1-hour, 30-minute, 15-minute. So usually that's a daily squeeze I'm going to look to get short. With the thinking all those lower time frame sell signals drag the price lower and then eventually trigger that squeeze short. And as far as the implications of HYG firing that daily squeeze short, more than likely puts more pressure on the market. So that is no bueno. And then the Dixie, the old dirty dollar. This starts to get some positive shifts in the favor of the bulls, the Dixie bulls, which usually not too good for the market. Momentum crosses positive. Daily chart prints a buy signal. 4-hour and the 2-hour print a buy signal. So the S&P's breaking daily structure are under their 21, with the junk bonds HYG coiled up in a daily bear squeeze, and a pretty good rebuild over here in the dollar. Things to be mindful of. Things to be mindful of. But if they can pop this thing, let me see, 10, 15 bucks, then they can kind of begin to stabilize it. So imagine you're falling off a cliff right now. All right, we're hanging on to that 21 EMA for dear life. If we can pull ourselves back above it, all right, we might survive. But the more time we spend hanging onto the edge of the cliff, greater the chance we're gonna fall. So they need some lift and they need it quick. A couple more pre-market quotes and we'll do some Q&A. You have Apple going to open up at a key level of 170. All right, let me see, 170. That's where Apple starts to get some problems. Ever since March, you've respected that daily 21. Right? Every pullback to it has been a great buying opportunity. 1, 2, 3, 4, 5, 6 times in a row. So a huge part of trying to call for direction It's just simply whether or not you're north or south of that moving average. So today, as we open up at 170, not the end of the world, but could lead to some trouble. A little bit of a break in your trend. So Apple, let's see, Google here, that comes in about 120, 150. And Google's pretty good here, down to like 115. Now, if you're buying it up here, it's not going to feel like it. But Google continues to be one of the better looking charts. Then Nvidia, the talk of the town today, with earnings tonight. So that shall be a big one. So there might be a lot riding on that. A couple more here. See Microsoft, 313.50 at the open. And this chart is good down to like 308. So frankly, with the exception of the S&Ps, nothing's falling apart, at least up to this point, on this little 2-day dip. Microsoft's going to open at 315, 313. From there, they can drop another $5. And to me, it's still a chart I'm looking to buy. So you got to respect where we are. Some of the funnest trading you're ever going to have is when your Googles, your Microsofts, your Amazons, you start getting these big spastic rallies. Right? They're awesome. All kinds of fun. But at some point, in the short term, how much more are you asking for? Next thing you know, guys, we're taking entries in Google at 10 freaking ATR above your daily 21. Usually not a winning approach. Like at some point, they got to come back down to earth. Let everybody who chased it and bought it up here get shaken out. And then you're looking for the great exchange, right? The great exchange meaning you buy the Google calls down here when frankly nobody really wants them. Google's not popping up on a breakout scan yet. It's not popping up on a volume scan, not popping up on brand new 52-week high scans. You buy them down here in the squeeze when things are quiet. You catch the huge push. And then from there, you pass them on to Billy. All right, Billy's the guy who likes to buy up here. You say, hey, Billy, I bought some Google calls for $2. They're going for $10 now. How about you take them off my hands at $10? And Billy, being Billy the Chaser, takes them off your hands for $10. Then you get the inevitable reversion to the mean. And like a gentleman, that's where I would come back in and say, hey, Billy, I'll buy them back from me at $5 now. Right, that's the great exchange, just trying to be in rhythm with the ebbs and the flows. We're aggressively putting cash to work down here because there's your best risk versus reward entry. We pay ourselves into the strength, and then we can play for continuation, but we have to play for continuation in a fashion where if you wake up to a day like today, it can't be devastating. Like you can't put yourself in a position where you're buying Google up here and the pullback to the buy zone takes you out of the game. All right, just not responsible trading. But all right, guys, that's my spiel for this morning. Going to get long some SPY puts under the daily 21. And then I'm still watching the Teslas, still watching the Netflixes. See how they handle the flush. And we'll kind of take it from there. So any questions, anything you'll want to look at, throw them on over. They were looking so bullish. And now they're looking meow. A little bit of meow. Hey, Tony, always my pleasure, man. Yeah, Scott, for NVIDIA, it all kind of comes down to earnings tonight. Then tomorrow we can read a bit more into it. Again, guys, NVIDIA's a name here where this closes today at 307. Earnings comes out. It gaps down $20 tomorrow morning. Nothing's wrong here. The uptrend hasn't died. Structure won't have completely broken down. So we got to respect where NVIDIA's at as far as the ebbs and the flows. Pulls back to a 21, reloads, big push. Yeah. Back down at 290. I think still just as solid. Still just as solid. There you go, SR. Coop. Target's been looking like a good short. And they did take out that 150 level yesterday. And you're going to open up about $1.46 this morning. Yeah, to me, Target looks like a pretty good short the rally candidate. Let me see. We got the we got a big weekly squeeze coiled up. And I would think any given day now, the weekly squeeze should start to print the sell signal. But even worse on the 3-day chart. Hang tight, guys. Add time frames. 3 days. All right, cool. So over here on the 3-day time frame, got a 3-day bear squeeze, like right on the verge of firing short. And then nested inside of that, you have the same thing here on your daily chart. So even though Target's taking a pretty good tumble here, as you're taking out that key 150 level, these two giant squeezes still haven't fired short. They begin to fire short. I think you're looking for continuation to the downside. But if we look at the inverse chart, so minus TGT, flip this thing upside down. Everything looks good here for a long, other than the entry. You got squeezes, you got buy signals. You try to nail your entry right near that 21 EMA. So looking at this chart, we're now at the point where we should already be getting paid or have already taken our full paycheck off the table versus we're now at the point where it's like, hey, let's get long Target. Well, you should have done that 4 days ago. So kind of the same thing here to the short side, where the juicy entry would have been back inside that daily squeeze. That 155, 156 kind of neighborhood. So from here, you can look at, say, the 1 hour chart. And a little bit like back here. All right, first break. First back test of the falling 21. You can't break above that level. You probably continue lower. So those, I think, are great spots for a short. The opposite of what we're looking for in a Netflix or a Tesla. All right, let them pull back to a buy zone. Then see if you can't get continuation of the push to the upside. So Target looking like a good short. Money made all day, every day. Gold, AXU, and the USD. Let me see. XAU/USD. I can't get that one to come up on my end. Let's check out gold. Gold's not too far from where I've been looking for it. I think 180 could be the landing spot here. So check out the weekly chart. So 180 would be the weekly 21 EMA. All right, so again, going back to the ebbs and flows of the trend. Big push off the weekly 21. We come back to it, find support, trade sideways. Then you get continuation. All right, so there's your higher high, and there's your higher low. All right, big push. Again, we get a higher high. And now what I'm thinking here for the last couple of weeks is we might have to come down to that 180, revert to the mean, put in another higher low, and then potentially from there you turn the corner, go on ahead and get the breakout. And what I've noticed is the shift in your daily momentum down here on the big three histogram usually plays a pretty big role as far as the push away from and the move back to the that weekly 21. All right, so look at the daily chart. All right, so back here, daily momentum goes positive. That triggers a big push off the weekly 21. Momentum broke negative. We pull back to the weekly 21. As soon as momentum crosses positive again, we're again rallying off the weekly 21. And now for the last handful of weeks here, you got that negative break. And that's what has me thinking we might come down a little bit more. Then you're looking for support around that 180. And then the next positive turn should trigger the continuation of that trend. So that's what I'm looking for from the old Goldberg here in the short term. A little bit lower, and then ideally a heck of a lot higher. Hey guys, how's the audio doing now? Seeing a couple comments here. Is the audio better? I got to make sure I get that cleared up by this afternoon. Yeah, Turbo, how'd Paolo do? I think last night they were up like $7 or $8. Nice move, up about 10 buckaroos. Very nice. I want to say the market makers are pricing in about a $12 move. So pretty nice gap higher, pretty much in line with the expected move here. All right, cool. Audio was all good. Good to hear. But all right, folks, I will let y'all go there. Let you go on ahead and get ready for the open. Quick schedule update, though. Let's check the calendar. Let me see. Yeah, so Friday afternoon at 12 p.m. Central, here in the free room, we're going to do part 3 of our squeeze discussion. So part 1 was the intro to the squeeze, the basics, the beauty of it all, and then last week we talked about the nested squeeze setup, where you got 1 squeeze, 2 squeeze, 3 plus squeezes at once. And then for Friday's session, we're going to talk about additional indicators to help you gauge, whether or not that squeeze wants to fire long or short. Which, of course, on my end is going to be the big 3 signals. So that'll be a good time. Hope to see all of you then. But otherwise, guys and gals, thank you for your time this morning. Hope you find it helpful, and I'll talk to y'all soon. Go get 'em. Adios.